Greetings everyone, happy Friday to you. This is Joseph James, schooltrade.com. Here's your live film recap, January 21st, 2011. Happy Friday. We had a great week this week. We had the Martin Luther King holiday on Monday, so all we had was Tuesday, Wednesday, Thursday, and Friday. Here we are Friday morning. Now let's talk about what happened today, right? Friday with no news. What happens when we see a Friday with no news, guys? No news Friday means we're looking at probably low volume, an early close to our morning trading this morning, right? Fridays are always going to be one of those days where the same reason why you and I, right, we want to get out from behind our desks on a Friday, enjoy our weekend. That's the same reason why most of us need to stop trading a little bit earlier on Friday morning. So it was a Friday morning. We had no news to worry about. Now, when I say worry about, I mean there's no news to give us any real big moves in the market. So a Friday with no news, we're going to be extra careful. Watch the speed, watch the volume. Look for big money. Usually it's going to be lack of big money, right? Lack of big money, meaning the big institutional sized traders, they're probably getting their weekend started early on a Friday. And then most importantly, watch the time. On a Friday morning, I'm watching my alarm clock here, watching my alarm clock very closely because at 10:30, 10:45, we're going to start seeing that volume leave the market, right? Hit the lunchtime session, and we want to be paying attention to that. So Friday morning, no news. We knew what to be looking for. We saw the dollar this morning. Always begin our day with the dollar. Now, did you miss the morning prep today? If you saw the morning prep posted on the blog this morning at 7:45 a.m. We then went over the morning prep live in real time in our live trade room. We start with our dollar. Our dollar we saw stuck at the lows again. Now, the dollar ended up dropping off those lows and making new lows later on this morning. But we began our day today with the dollar stuck right in that little tight, narrow trading range below the sideways range up top, above the range below, and for the most part, sitting there kind of hanging out, waiting for something, right, to push the dollar around. So dollar was stuck at the lows and trading sideways. We'll grab a look at that chart here in a moment. Now, what the real big story of today was a couple of different things. First of all, on crude oil, we took a first trade loss. Now, guys, I always remind myself, my mom told me when I was a kid, right? I remember it like it was yesterday, right? She said, Joey, never let a mistake get away without learning something from it, right? It makes no sense to let a mistake get by you without learning from it. So we're always trying to learn from our mistakes. In fact, that's probably one of the most important things we do every day in our live trade room is we take notes, right? We take detailed notes, we write down all the mistakes we make, and we learn from those mistakes in our members' trainings, right? We learn from those mistakes in our live trade room. We share all the ideas, right, of how to learn from those mistakes, guys, in live trade room. It's a great place to learn. So I made a mistake this morning. First trade of the day on crude was a loss. Now, whether we call it a mistake or whether it was just being on the wrong side of the market, we're going to show you guys more of that mistake here a little bit later this morning. So the first trade was a loss. But what happened was I made a mistake. I learned from that mistake, and the markets have a great way of really quickly telling you, right? Take a trade, oh, got a loss, made a mistake, right? Very efficient at telling us when we make these mistakes. In fact, a lot of other industries, you're not going to get that instant feedback, right? That's really good about being a day trader. Being a day trader, we get instant feedback, and we can make educated decisions based upon that feedback. So I get instant feedback from the crude oil at 9 o'clock this morning. And if you guys are with us, right, we knew going into the trade it was going to be a little more challenging. But we quickly realized our wrong side of the market. We flatten our trade, take the loss. Now at this point, we learn from the mistake, we get back in, and I turn that into the biggest winner of the day. We made 50 ticks off that first, right, off the second trade. First trade was a loss, second trade was the winner. So we turned that losing trade into a big winner by what? Learning from those mistakes. Then, of course, we saw crude finish up this morning in a very narrow trading range. We only had 2 trades on crude today, right? Only 2 trades. And then late in the morning this morning, we had this narrow wedge pattern, and we kept chopping around this wedge pattern. We'll take a look at that as well. So we had some early morning crude trades. Late in the morning, though, not so much, right? Very, very sideways and quiet. Now, gold is where we made the most amount of money today. But the gold had a really hard time getting those final profit targets filled. If you were with me this morning in the room, you saw 3 of my trades failed to fill that final profit target. Now, if you were with us this week, we saw tremendous success this week by simply making sure that we put our final profit target in the right spot and then waiting for price to come to us. We tried that today, But the problem was low volume on a Friday morning without any news. We had less than desirable price action on gold. So we put our target at 20 ticks. We went up to 18 ticks and then came right back down, right? So normally, and again, right, if you were with us this week, you saw this week how every time we placed that target properly, we got it filled. So what the difference this morning? Why didn't the gold fill the final profit targets this morning? Because the volume wasn't there. We didn't have that speed, that volume, those big money buyers and sellers pushing this market around. Most likely they were outside enjoying the great weather, right, and not, of course, in the markets this morning with us. So no news on a Friday. It results in gold not filling those final profit targets, not getting all that oomph, right, that speed, that movement we need. So the final profit target didn't get filled today. That's what, of course, you can see here, we didn't make as much money. All right, guys? So we had a great day in the room, great week in the room. We finished up a great week here, guys. Made a first trade mistake, made the money right back by learning from that mistake, and then gold was a pretty big winner for us, but we still couldn't get gold to fill those third and final profit targets because the volume was a little bit too low today. All right, guys? Let's see how we did. 2, 4, 6 total trades. As you can see here, we didn't trade nearly as much as we traded in the past. This week, we were trading anywhere from 8 to 10 times a day. This, of course, you see 6 total trades. Now, again, you'll notice first 2 trades on crude, then we went to gold, right? 4 trades on gold. And you'll notice here, it goes long, short, long, short, long, short. This is kind of uncharacteristic, right? Yesterday, it was all short. Day before that, right? All long. So what happened here? Sideways range, right? Sideways, choppy, low volume markets. Buying the lows, selling the highs, avoiding the middles. You'll notice we didn't get anywhere near, right, the amount of profit that we did yesterday on the final target. See the final target there? 35 ticks. So we made $350 on the final target. But you can easily see there, only 2 of those trades actually got the target filled. Right? The other 4 didn't get that final target filled. So instead of making 40 ticks, we make 20, right? Big difference there. It's almost twice as profitable if we just had some more volume and get those final targets filled. Nonetheless, though, guys, I'm content with these results. We're happy to take these results today. 138 ticks. That brings our weekly total to 8,200, right? 8,220, over 820 ticks this week, right? Pretty good week for a 4-day week. And of course, the monthly total here at 16,000 for the month. So as you can see, great week. We're having a great month. We finished up a great year in December, and we're hoping to make even more money in the year of 2011. We'll keep you guys posted throughout the rest of the month. So as I said before, here's my dollar index, right? Here's that dollar chart. Now, what do we know of the dollar again? The dollar is that fundamental correlation, right? We use the dollar, and we use that negative correlation. Now, look where we are again. Now, if this looks pretty familiar, guys, it's because I could have used the same chart 2 days ago, and you wouldn't even know the difference. We've been chopping around this low here for quite some time. Now, there's my price channel, right? These green trend lines, right? There's my price channel. So the dollar had been trading sideways here, right? Dollar trading sideways inside the price channel. And then we find the dollar now tucked just underneath that sideways range, right below this trend line. So here we are, right? We've had the dollar tucked above the trend line and below the sideways range, as you can see here, for 1, 2, 3, 4, right? 4.5 days there on the dollar. So here we are, dollar is at the lows, but this is one of those situations where we really have to look at this and go, okay, we're going to have 3 different possible scenarios in the dollar. What scenario 1? Scenario 1 is we could rise back up. Right? That's scenario 1. If I rise back up, what am I looking to do? I'm going to sell resistance levels on gold, crude, euro, Russell, Dow, S&P, right? Whatever you guys trade. The second scenario is price may drop, right? If price drops, I'm going to look for buying opportunities at support on the markets I trade. And then what's the third scenario? The third scenario is, what if we just go sideways? If we go sideways, I'm going to now expect other markets to go sideways, which means I'm going to sell the highs and buy the lows.